Welcome to another Three Steps to Startup podcast brought to you by Tech Connect West Virginia, Innova Commercialization Group, and the West Virginia Jobs Investment Trust. This is Jeremy Turner from Epic Mission, where we are guiding the heroes of change, and I'll be your host. This podcast is part of the Three Steps to Startup initiative. The goal of Three Steps is to provide early-stage entrepreneurs with critical assistance and structured guidance for innovation commercialization, from ideation to product launch and market entry. Three Steps to Startup is made possible by support from the Appalachian Regional Commission and the Claude Worthington Benedum Foundation. Today's podcast is one in a series in which listeners will have an opportunity to drop in on conversations with industry veterans and subject matter experts who offer deep insights and actionable intelligence to help entrepreneurs launch and grow their ventures. Today, we're picking up a conversation we started previously with Scott Ewing, co-founder and principal business analyst in the Appalachian Investors Alliance, or AIA. AIA is a nonprofit that facilitates greater access to angel and venture capital for entrepreneurs throughout our region. Scott, we appreciate you joining us again.
Thanks, Jeremy. It's a pleasure.
Scott, last time you talked about the difference between planning and execution risk. You reminded us that investors gauge planning risk by looking at the company's business plan and financial documents. Execution risk, you said, happens when an entrepreneur fails to successfully carry out their business plan.
That's right.
Well, the title for today's podcast is "The Problem with Your Pitch is the Problem." Since an entrepreneur's funding pitch is meant to give investors a quick introduction to the company's business plan, can I assume that the quote unquote problem you're talking about is an unmet market need that the entrepreneur's invention or service is intended to address?
You might think that, but you'd be pointed in the wrong direction.
Okay, does the problem mean a technical or scientific challenge to be overcome?
Getting bolder.
Okay, well, you've got me wondering. I expect when you say the problem with your pitch is the problem, with that second, the problem in capital letters, that you're saying the entrepreneur is off base with their product or service definition, customer discovery, or assessment of market need. But that's not what you're aiming at here, is it, Scott?
No, but those things you just mentioned are critical to creating a good business plan. They're definitely important. But what I'm talking about, and what I'll talk about today, is one of those insider tips that every entrepreneur ought to take on board.
Okay, Scott, you're keeping me in suspense here.
Think about it from an investor's point of view, Jeremy. What problem do millionaires suffer that leads them to take up angel investing, which is an activity many people insist is out and out gambling? Is it boredom, ennui, devil may care, excitement seeking, or an overweening civic responsibility? Okay, I'll suggest a less pathological explanation, and that's inflation.
Which, if you read financial news or visit a grocery store or buy gas or looking for construction materials or shopping for an appliance or do just about anything, you'll be shocked these days to see how quickly prices are rising.
You're right. Inflation is insidious. It eats like rust at the value of money each day. Given time, a dollar will become worth less than loose change. Even at today's single-digit inflation rate, the US dollar will lose half of its value in under 25 years. So what costs $50 now will cost $100 in the not-so-distant future.
With inflation, all investors face the same problem, right? Stock market investors, 401k and IRA participants, bank savers, angel investors. That continual loss of purchasing power of the dollar should weigh in every decision about where, when, and how anyone puts their money to work.
So without waiting for decades to pass, investors understand that money left idle as cash or on deposit earning at best maybe 0.5% interest is being wasted as if dollar bills were one after another being peeled from a stack and fed into the shredder. For an average person with hundreds or a few thousand in savings, the percentage loss to inflation may not prompt action, but a millionaire or investment fund stands to lose around 50,000 this year alone on each million they keep in cash uninvested, simply due to inflation, which officially ran at 5% a month or so ago, but by some estimates, maybe twice that for consumers. So losing that much value for being in cash is a big, big problem that needs a solution.
Okay, from an investor's perspective, inflation is the problem, with the problem in capital letters.
Right. So most entrepreneurs may get that, but when they put together their pitch deck and create that slide that's titled "The Problem," what do? They don't frame their pitch with the investor's problem in mind. They right away start talking about a problem in whatever market it is that they believe would require their solution.
That's a really interesting observation, Scott. Anyone with sales experience knows that real solutions fit an acknowledged need. And if you understand that an entrepreneur pitching to investors ought to be selling their business idea with just as much skill as if they were selling product to a customer, then it makes perfect sense that the entrepreneur would position their pitch to address the investor's problem or need.
Yeah, and Jeremy, again, you've got background in sales, so you get that. But there's a conceit, isn't there, that often seems to come with possessing money. Investors know that they have options, various ways to put money to work to try to keep pace with inflation. Stocks, bonds, real estate, commodities, collectibles. Whereas creating a startup, looking for outside capital, you may have limited options. Those with financial capital have options, and as long as they keep their money working, time should be on their side. They can afford to pass on a deal because odds are another deal is waiting for them right after the one you propose. A hungry entrepreneur, though, I'll wager, needs funding ASAP.
So from a sales vantage, it doesn't seem as though the entrepreneur is in a strong position. The entrepreneur needs investment capital more than an investor needs a particular deal, or is that not entirely true?
Angel investors will tell entrepreneurs that they suffer no shortage of deal flow, that plenty of investing opportunities come their way. And something entrepreneurs can take advantage of is that most deals pitched to angel investors are of a poor quality. Most so-called entrepreneurs and their business ideas are uninvestable. And to be frank, if you're competent at starting and running a profitable business and you have an attention-getting idea or innovation to show, it's likely that you start out head and shoulders over competition when it comes to getting a hearing from investors.
Well, as with most things, there's likely to be something like an 80-20 rule in place for angel investing. 80% of the deals won't be fundable. Perhaps 20% will make it through to due diligence and maybe get funded. What about this, Scott?
20%, or 1 out of 5 deals, is about the long-term average yield rate, countrywide average for deals getting funded. That's exactly right. But I can tell you that angel funds in the Appalachian region are sitting now on millions of dollars of sidelined, uninvested cash that they're looking to put to work in new and small businesses. Imagine how much underutilized financial capital there must be in money center, big metropolitan markets. With interest rates on dollar savings stuck at all-time lows and the unprecedented supply of money created through borrowing and government stimulus, investment capital is being forced to chase greater than market rate returns from alternatives such as hedge funds and derivatives, private debt, private equity, and venture and angel capital.
Well, that sounds like good news for entrepreneurs. Investors are actively looking for deals. And if you were advising entrepreneurs in this environment with high inflation eating away at the value of capital and investors looking to make deals, what would be your main point, Scott?
An entrepreneur pitching for funding needs to think like a good salesperson and understand that when they frame their offer to match, quote unquote, the problem, they mustn't fixate on the problem as they see it. Solving world hunger may be the problem an entrepreneur sets out to overcome, but world hunger isn't the problem that investors face while keeping cash parked on the sidelines. So even if investors are philanthropic minded or call themselves impact investors who genuinely would like to see solutions that address world hunger, good ideas alone won't move you to the head of the queue when receiving funding.
Okay, so in practice, Scott, how does this framing piece work?
So psychology experts have published findings on investors that suggest most angels are caught between two great alternating fears: fear of loss and fear of missing out. A talented entrepreneur selling to investors might craft their pitch so that it tones down elements of risk while amplifying the worry in a subtle way about missing out on a quality venture.
All right. Well, Scott, I'm going to put you on the spot as we approach the end of our time together today. Let's imagine the entrepreneur is out to solve world hunger. He or she is presenting to impact investors that are interested in social return on investment as well as financial return, as many Appalachian angels are. Can you give us a sample of how you'd start a pitch to investors that was framed around their problem, as you said, of needing to put capital to work to stay in front of inflation, plus play to their concern about missing out on the right opportunity? Can you give us an example? And at the same time, you'll obviously need to talk about the very real problem that the entrepreneur is meaning to solve. So Scott, can you offer an example of how the beginning of a pitch like this might sound?
Okay, so if I were pitching, it'd be something like, investors, thank you for the opportunity to discuss your biggest challenge, and also what the consensus of experts says is one of the greatest opportunities in a generation. Food security can have an immediate and lasting impact as it affects your community, just as it involves a multi-billion-dollar worldwide need. And then I'd go on to say, our XYZ company has unique proprietary technology that's already received contracts from such and such. We now have an angel stock offering at a value that's some multiple X times your seed offering. Before the round is fully subscribed, let me tell you why so-and-so, the investor in this space that you all have heard about, is backing us and not a competitor. And if I had more time, we could unpack that, but listeners should understand that I'm not trying to pull off sales trickery with the way I frame it and open a pitch. Nothing can make up for a bad business model, target solution. But what a good presentation to investors is meant to be is an effective communication of a quality offering of a solution that meets the investor's stated and unstated interests. Remember, their problem. And the problem of the company is ostensibly out to solve with their business model. You heard that a moment ago. I put the two problems together, right? The problem of world hunger and the problem of missing out. So entrepreneurs may want to think about all that when they next plan on raising early stage capital.
Wow, Scott, as always, really great information and wonderful and actionable insights. So thank you so much for sharing that with us today.
My pleasure. Yeah, always fun to be here.
Great. Well, we've reached the end of this episode of the 3 Steps to Startup podcast, brought to you by Tech Connect West Virginia, Innova Commercialization Group, and the West Virginia Jobs Investment Trust. It's our hope that you, the listener, heard something today that challenged you to think differently and provided the insights you need to take your venture to the next level. To check out additional episodes of the podcast or to learn more about the 3 Steps to Startup initiative, please visit 3steps2startup.com. Thank you for tuning in, and we will look forward to seeing you next time on the 3 Steps to Startup podcast.